Hello traders and welcome back to our YouTube channel. In today's video we're going to be talking about the take profit level. You will understand why we should use take profit in our trading. I'm going to teach you 3 ways to determine the correct take profit as well. And also by the end of this video we're going to go over some examples. So make sure to watch until the end, subscribe to our channel so you don't miss out any of our future content, and also check out all the links below this video. Follow us on social media, join our free Telegram channel, and don't forget to check out our website as well, where you can find a lot more information about us, what we do and what we offer. Okay, without further ado, let's get into this one. So first we're going to start off with why we should use a take profit in our trading. Now the first thing is to determine our risk to reward ratio, because when we place our stop loss and our take profit level, then we know what our risk to reward ratio is. And therefore we know if we should enter this trade or we should actually stay away from the market, because obviously if we got a negative risk to reward ratio, it's probably best not to enter this specific trade. And when it comes to risk to reward ratio, here is an example on the euro dollar. I'm currently looking at the hourly chart. So let's say, for example, we're looking to enter a short trade here. This is where we're going to place our stop loss, and we need to find out where our take profit level is going to be. Now, if we're looking for a take profit down here at this level, 1.1110, well, that probably means we're going to have a negative risk to reward ratio, or maybe a risk to reward ratio of 1 to 1. If you're looking for a greater ratio, then that means you need to look for a bigger take profit. So let's say, for example, the psychological round number of 1.10. This is about 160 pips away from current price level, and let's say, for example, that your stop loss is going to be 100 pips. So that's over 1 to 1.5 risk to reward ratio. But if that's the case, then what you need to do is, obviously, again, you need to do your analysis and you need to find out if there is any major level before your take profit level that could affect price action. And then you have to decide if you should follow this setup, or for example, what you can do as well is you can wait for a pullback to a higher level, then you can enter a trade somewhere up here, and then you can look for take profit down here at this level, a much smaller take profit, but at the same time, in this case, you will have, let's say, about 30 pips of stop loss for a potential 60 pips of take profit. Right, and this is how your risk to reward ratio changes when you're looking at different trading opportunities. Okay, so again, based on the take profit and the stop loss that you set on your trades, that's how you determine your risk to reward ratio. And there's a few more points which are very common mistakes when it comes to placing the correct take profit. One of them is, the desired profit, or basically how much you want to make on each one of your trades. And that's when you don't place your take profit based on your analysis the way it should be, but you place your take profit based on how much you want to make out of every trade that you take. Okay, also another common mistake is the missed take profit, which means when price reverses just a couple or a few pips before your take profit level, and that's when you leave the trade because you want for price to come back to your take profit and take you out of the trade. But in most cases, price just reverses, and it means that you should have closed your trade manually. Also, the desire to trade, that's when you take impulsive decisions because you're expecting a certain thing from the market, and you don't wait for the right setup and entry moment, but you rush to go into a trade because there's fear of missing out, or you just want to be actively trading all the time. Also, every time you set up a take profit and then you change it, in most cases, that's also a mistake. And also quick profits. And what do I mean by that is basically entering and exiting trades in a short period of time, which in most cases gives you a negative risk to reward ratio. That's when you open a trade and then 10-20 pips after that you close it just because you've made some profit and you're scared not to lose it. Okay, so you can see how important it is to know where to correctly place your take profit, and there's a few ways on how to do that, and this is what we're going to go through in the next few minutes. Now, the first one we're going to be talking about is probably the most basic way of how to correctly place a take profit level, and it's something that, in my opinion, works best. And this is the support and resistance levels. So let's say, for example, we're looking at this move which has reversed recently. Right here, for example, we've managed to enter a buy trade, and what we have to do is to first determine our stop loss level, which could be below this most recent low and below the wicks of this low as well, just for that extra security. And then we need to find out where our take profit level will be, and that's also based on previous resistance levels, since we're talking about a long trade, which means we've just bought here. So our take profit could be at some higher level which is in confluence with previous level. So let's say, for example, this resistance up here, this is where our take profit is going to be. But for example, if we've got this resistance before that and we don't expect for price to break above that resistance, that means in this case we might have a negative risk to reward ratio just to this higher level here. And that also means in this case it's probably best to skip this trade and wait for a better setup. A better setup could be if we see a break above, retest of that level, and then we can look to enter a long trade here instead of entering here. Okay, however, if we're expecting that price will easily come up here and test this level, then we can open a trade down here and expect for price to come up here. So that means this is where we're going to set up our TP level then. Okay, so let's have a look at an example on the chart. This is a trade that we currently have on pound dollar, and what you can see here is that we've determined our stop loss and take profit levels based on previous support and resistance levels. This is where we've made our entry. Our stop loss is above this previous high, and at the same time our take profit level is right down here, just where we've got this previous support. Okay, and you can see how I've placed my stop loss above the wicks of this previous high, but at the same time my take profit is on the body candles of this previous low. Okay, and that means I haven't placed my take profit below the wicks right here, but I want to make sure that if price retests that previous low, I will be out of this trade. So that's why I've placed it right here at the bodies of the candles. And this is a perfect example of how to determine your stop loss and take profit levels based on support and resistance levels. There's also another tool that we can use to determine our take profit level, and this is called the Fibonacci expansion tool. So let's say if you haven't got any previous, any recent support or resistance levels, or if, for example, price breaks above all-time highs and you haven't got any resistance above current price levels, this is what you can use in order to find out where to exit your trade. Now, you need 3 points in order for this to work. Okay, first you need your point A, your point B, and your point C. This is where you will enter your trade, and then you have to place your Fib expansion tool across all those 3 points, and that tool will give you the next target levels to watch out for. Okay, now the Fibonacci expansion together with the retracement tool is something that we like to use in our trading a lot. We know it works very well, and that's exactly what we used in confluence with previous support and resistance levels, and that's how we determine the best possible take profit levels, where sometimes price reaches that level exactly to the pip and it then reverses, but we still manage to collect profit before that. This is the chart on all. I'm looking at the hourly time frame. What we see here is that we are in an uptrend, but when it comes to this point right here, we know that this uptrend should continue higher. However, we haven't got any recent values above current price levels. So that means, like I said, in this case, you can easily use the Fibonacci expansion tool, and we're going to place that on the most recent impulse. This is our point A, our point B, and this is our point C. Okay, you place the two across those points, and what you see right here is the next levels that you should watch out for, and something that you can use for your take profit level as well. Okay, so like I said, first you need to determine your stop loss level. So let's say you enter a long trade here. For example, you want to place your stop loss below this structure right here, and then you've got your first target, right here. You've got your second target, which the Fibonacci expansion 2 gives you, and then you've got your third target as well. And what happens next is you're observing price action and you want to see what will happen and where you want to exit your trade. As you can see, price has easily reached the first take profit level. Then we've got a continuation up to that second take profit level, and in this case I believe we've also got a continuation higher, even to that third take profit level, which is a great example of how well the Fibonacci expansion 2 works right here. Again, exactly to the pip, like I said. Not every time you need to place a take profit with your trades. To be honest, there will be times where, you're going to be looking at a setup which could develop to be a much bigger move than expected. And if, for example, you manage to enter a trade in the beginning of a new trend, a trend that you're expecting to continue developing in the long term, then what you can do is, after you've made your entry, then you can just move your stop loss below each and every higher low that price makes. And this way, you kind of squeeze out as much profit as possible from a certain move, and in the near future, when price eventually reverses, you will get stopped out, but you will have managed to take advantage of that whole move instead of exiting your trade earlier, right? I think a really good example of that could be the gold instrument and what's currently going on in the world. We've got a war between Russia and Ukraine, and in times of uncertainty, when there's such a bad events with two major economies, you can't really know at what point price will stop increasing. And I mean especially the price on gold, which is strongly affected by something like this. So let's say, for example, you've entered your trade here at the 1900 level based on your analysis, and you're expecting a move higher. And like I said, because of the war, and a lot of investors are investing money into gold right now, you don't know for how long price will continue rising. It could actually create all-time highs, and that means in this case you're not going to be looking to collect profits at a certain level, but what you want to do is to move your stop below every higher structure. Okay, so first you've placed your stop loss, let's say down here, then you move your stop loss below this structure, then you move your stop loss up here below this new structure, and as price continues rising, you just find those new levels at which you want to place your stop loss. Okay, you then have this higher low, then you've got this higher structure, and in this case, if price reverses and it stops you out, you will have managed to take advantage of this whole move rather than exiting at a fixed level, and then you see price continuing much higher, and then you just have to leave those money on the table, right? This is what I mean. There's another impulse higher. What you're gonna do then is you're gonna take your stop loss, move it below this most recent higher structure, and then at one point you will be stopped out. But I guess you already get the point, and you see what I mean by a trailing stop and not using a take profit. So hopefully you found this video helpful. Please leave a comment, give us a like, subscribe to our channel, and again, check out all the links in the description down below. If you have any questions, obviously you can get in touch with us, or like I said, leave a comment in the comment section down below. I'll see you guys in the next video. Take care, everybody. Thanks for watching. Please don't forget to watch our last two videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.